The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the Valentine's Day edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. And I want you to know that I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free, pick up that phone. Now is not too soon. 877-927-6648. That's the toll-free number you call it on. You can call 727-445-1044. Of course, you can send me an email, steve@tfnn.com. And inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on terrific Tuesday. Of course, it is Valentine's Day, so happy Valentine's Day to each of you out there. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow traded up 61 points at 20,472. S&P up 5 points at 2333. NDX 100 up 9 at 5265. NASDAQ Composite up 11. Russell 2000 just turned slightly green, up nearly 2 points. The semiconductors are down 2 points. Gold is off $1. Silver's up 3 pennies. We'll call them unchanged on the day. Light sweet crude is up 28 cents. Leading the charge here to the upside, it is Sinosure. CYNO is a ticker symbol, up 28% or $14. Charles River Labs up nearly 6 or about 7%. SVB Financial Group up 5. Chipotle up 5. Jones Lang LaSalle up 5. McKesson Corp up 4.30. To the downside, it is Priceline leading the charge dollar-wise, nearly 0.6%. To the downside, or $9. Log Me In, or Lomain, however it is you want to take a look at that name, LOGM. That's the ticker symbol, off 7% or $7.30. Watsco Company down $5. Tata Motors, that's down $4.70. And Popeye's LA Kitchen, or is that La La Land Kitchen? That's off $5, about 6.5%. Okay, doke to these markets. So what the Sam heck are they doing? Well, they're moving higher out here. And, you know, there are a few things, a few loose impediments, as I might say, if you were playing the game of golf. One of those loose impediments out here, if we take a look at the volatility index, it's just not confirming what it is you and I are seeing before our eyes. Now, it's not that this can't get resolved, because it can. But thus far here, it is not resolved. We have the S&P 500 moving to higher ground. You can see that lower left to upper right, panel number 1, the upper panel out here. We can see how price is making higher highs. Again, line chart we're looking at, that means closing basis. And if we look at the bottom panel, that is the volatility index, and this shows a rising bottoms line. As long as that rising bottoms line is out there, it is saying a Lee Corso, not so fast out here. I know that it's not giving you the shorting signal. You know, that's going to come when the bears show up, or a couple of other things out here, and they have not shown up. In fact, we'll take a look at some charts that show where the actual bulls have shown up, for those of you that trade the NQ, and some levels to be watching. If we take a look at, we did this yesterday, we took a look at new highs, whether it be in the Dow, whether it be in the NASDAQ Composite. Let's take a look at the NASDAQ Composite here. Right now, it is at new all-time highs, trading at 5777.32. The number of issues, and there's 30-some-odd hundred of issues inside the NASDAQ Composite. The total number of issues that are also today traded at 52-week highs is 153. You got to be kidding me. No, you're not kidding me. This is actual accurate data here, and that is a non-confirming factor. And this is going to be the great Houdini, David Copperfield magic trick here, because, and you know, this is where when you are at new highs, totally at new highs inside a market, this is where this type of information is critical for those confirmations out there. We just simply don't have it. If we switch over and take a look at the New York Stock Exchange, also at new all-time highs, trading at 11,452.22. It has 159 of its 3,100 some odd issues at new highs. What we see here is a declining tops new high level. Again, you can't use this as a timing mechanism, but I guarantee you can use this as a healthometer, if there is such a thing out here, and there is such a thing, even in the Dow, you got 30 stocks. I don't put as much weight in the Dow, but if we were, you've got 30 stocks, 7 of them are at new all-time highs, and we're clearly at a new all-time high. This too has a declining tops measurement. Inside the Dow, the more serious piece of it is the following. Well, let's go see whether it is or it isn't. I haven't checked up on this during the last hour, but we're going to take a look. This is the Dow stocks on the right-hand side. This happens to be a chart for Intel. That's neither here nor there. If we take a look at column number 2, it says MACD, but really what, and it's the difference between the 19 and the 39-day exponential moving average. But if we take a look at the number of issues trading below zero, right? This doesn't tell if it's just rising or falling. We need Stevie's oscillator on change line. But just simply, we're looking at it as a carte blanche. I'm trading below zero. In this case here, you have 1, 2, 3, 4, 5, 6, 7, 8, 9. 9! That's nearly 30% of the issues are trading below their MACD line. That is not a cool thing. You might say, what the heck does that mean? It's not a cool thing out here. Well, it means that typically, and what I like to do is take a look at the 15-day simple moving average of those numbers by day. And a positive is when the number of issues that are trading above its oscillator line are the 15-day simple moving average is above that 15-day moving average line. That's the red line out here. You can see we have been below it consistently since about January 24th out there. And today is no better. We're seeing that spread to the downside. Now, until price inside the Dow gets below, whoops, didn't mean to do that, gets below the oscillator and change line, that is priced at 20,280.45. This kind of divergence can go on for a while and doesn't mean as much. You really want to be able to put the two together. You want the two twains, so to speak, to meet out here, and they're not. You're at 20,474, so it is separating itself. But this is not a healthy signal. I do not know what the juggernaut is going to be. I thought maybe it was going to be Janet Yellen. That's not the case, or certainly that is not the case as we speak just yet. Maybe it's going to be something in Asia. I don't know what it's going to be. I just know that this is not the type of health that you want to see when the market is firing on all cylinders, because guess what? It's not firing on all cylinders. And you know how much of a longer-term bullish outlook I have. I just got to give the proper prescription for the market. Take 3 aspirin and go to bed. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. I see we got the newest member, Duncan Munchkin. No, Steve Mnuchin. But I'm sure that Saturday Night Live will go ahead and give him a Duncan Munchkin type of a deal out there. In any event, Dow's up 54, S&P is up 5. A good question came in, which was volume. I've mentioned the volume analytics inside of the QQQ series. You've heard me use this, and for good reasons, because the most important thing with regard to volume that you can understand inside of the Qs is how it makes its bottoms and how it makes its tops out here. So let's turn off these market profiles for the time being. And it was a great signal a couple of days ago, that meaning February 10th, when there was 13.9 million shares to the upside. One of the lighter volume days of the year. Could have been the lightest volume day for all I know. I see a fairly light volume day back here in August, but that was 216. So probably was the lightest volume day for 2017. And the Qs, their typical pattern is to form a top with light volume. Now, I don't like just a single light volume day out there. For me, that's just not enough evidence. Instead, what I like to do is take a look at a 10-day moving average of that data. And by the way, the Qs make high volume bottoms out here. The most recent one, was the one that took place on June 27th. It really formed over the 24th and 27th out there. Big volume to the downside. And let me show you what I actually like to look at here. This is the 10-day moving average for volume. Now, we can't take a look at today because today's not going to, it's averaging today's data, but this doesn't make sense with regard to today until we get to the end of the day. And you know how much I hate saying the end of the day thing out here. But if we take a look at yesterday's reading, the 10-day average, just a simple moving average, that's all right. Well, actually, is it simple? Yeah, it should be a simple, but let me just make sure. What do I have out there? Okay, I could have it. Now I've got it set at an exponential moving average. Yeah, let me switch it to the simple kind out here. And so yesterday's simple moving average of that number was 16 million shares. That's over the last 10 days. Today we're at about 15.5, but that's going to increase obviously out here. And when the market, when the Qs make highs again, you take a look at this 10-day number back here in August in 2016. It was making a short-term top out there. Didn't really get a whole lot out of it into the September 12th level, but nonetheless, this is the signature. You can see these big spikes here to the upside, and this is where you see bottoms that are forming inside of the Qs out here. But again, tops are typically made with light volume, and we're at historically we're at some of the lightest volume that we have seen inside of the Qs out here. You can't use this as a wholly independent signal, but you use this in combination with some of the things that you and I are taking a look at, and we're just saying, now look, if you're long the market out here, and if you are, I would always like to make sure that I'm clear about this. When I'm talking right now, talking about the day-ish, not day traders, but very short-term type swing traders. We're not referring to. I'm not speaking to those of you that are intermediate or long-term traders out here. It's not that I don't want to speak to you. I am speaking to you, but I don't want you to take any kind of action because longer term. So I should explain to you why don't I want you to take any kind of action out here. And it's very simple. If we take a look at, let me try to pull this chart up on the screen here for you. We're going to look at the New York Stock Exchange. So we know I can pull that up here, but I want to take a look at the advanced decline oscillator. And by the way, I have to manually calculate the volume oscillator summation index, which I do pretty much each day. And yesterday was a new all-time high in the volume, as well as the advanced decline line. So you had the double confirming message out here. And here is the advanced decline line. It's not, even though we're at newer highs today, the New York Stock Exchange, it's a slightly lower level out here. Don't pay attention to the number out here that's, in the hundreds of thousands. This is just simply because my study goes way back in time. So it just continues to add the net advancing or declining, the net number to each day's totals in order to give you a summation index out here. The purpose, now I'm speaking directly, to each of you out there, but certainly the intermediate and long-term traders. Even if there's a significant top, which I think there is a significant type top forming, and what I mean by that is one that could be a top that lasts for 2 to 8 weeks. And I'm sort of in, of course, 7 weeks now and a few days out here, not to get exact, but to be exact, something like that. When you get the New York Stock Exchange advanced decline line, and then you get a confirmation with the volume aspect, because eventually I'll get to it for you. When it gets to higher highs, which they have both done here, any kind of decline in the past has never been more than 10%. Now, 10%, granted, in today's day and age, you're trading at 2,300 inside the S&P. That's 230 points. I would feel like an absolute world of hurt out there, and 2,000 points inside the Dow. That's like the maximum that we have seen, historically speaking, out here. So any kind of decline or retracement is really just that. And, I'm not necessarily expecting that, maybe a Fibonacci relationship to that number. So 230 points times a 618 is going to be about 120 points or something along those lines. That's a realistic, doable possibility. We first got to get there. And we're just not there yet. And some of these things that you and I are taking a look at could be resolved, but they aren't being resolved. They're actually getting worse if we take a look at it. Really, the market breadth today is basically disgusting, or it has been disgusting. How do you classify disgusting out here? If I look at the advanced decline line oscillator reading on the bottom, we've got hooks to the downside, with the exception of the Dow out here. But inside the New York Stock Exchange and the NASDAQ composite, they're not really. Now, it's only 1:25 in the afternoon, so that too could change out here. But again, you should not be taking any action to the short side, swing trade wise. You just don't have any types of confirmations. We can go take a look at things, but there are some. I guess what I don't want you to do is be surprised when the market does correct. It's be more surprised that it doesn't. Now, I don't have a Trump-o-meter out here. I wish I did. I'm trying to figure out what that Trump-o-meter is so that we could add another tool or indicator to this in case there's just something that I'm totally blowing and overlooking out here. I just see too many divergences that say that there is now. Of course, you're going to say, "Man, what a rocket scientist you are! You had to go to school to figure that out." That there's some type of retracement. You can say, "Of course, there's going to be some type of retracement out here," but I think that it's more than just that. But hey, how about gold? I know there's got to be emails that have come in to take a look at gold and silver. It's flat. Now that in itself is an amazing thing. I'm not sure how to totally read this. Actually, I know how to read this. If we take a look at the Japanese yen, U.S. dollar currency pair out here, this thing is getting weak. Now, of course, you're looking at my chart saying, Steve, it's going up. What do you mean it's getting weak? It's getting weak in relationship to the U.S. dollar out here. And we're going to see that it's up above a significant resistance level. Yet gold is doing basically nothing. What does that mean? Now, you can see it's well above the daily TAS market profile. This thing wants to head higher. And gold, there's a relationship between the two, is hardly doing anything. Let's try to figure that one out when we get back from this break. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So the chart that's on my screen right now, and this just kind of makes it, fairly clear. We can see that the correlation between gold and the yen. Now, this case here, I switched to yen futures. That way I don't have a delay, and you can take a look at bar by bar exactly what it's doing out here. You can see this little wide-ranging bar that took place at 10 o'clock this morning between 10 and 10:10. You can see that the correlation really exists. It's not an exact, but it's so darn close that, it's still really in place out here. And it's not like pip for tick or anything along those lines out here. But the correlation really still is in place. So we know that's the case. So nothing has really come unglued there. We know that the price of gold has held up very strong, or I believe it has, because it's flat on the day, and that's fairly strong in consideration for overall on a daily basis the breakout that we have seen inside of the Japanese yen. Now, with regard to gold, so what does that mean out here? If we go switch over, let me see if I can find this chart out here that would show us both gold and silver. Now, it's going to be the continuous contract, but that's okay for our purposes right now. What we can see out here is that here's a screen where the top portion is gold. Right below that is the price oscillator, difference between two moving averages. And below that is silver. And below that is its price oscillator. So we can see that they're both above zero. Remember, I was referring to the Dow and 9 stocks with a price oscillator below zero out there. Again, it didn't tell me whether it was rising or falling, but it's not a healthy situation like it has right now. At least in the past, it hasn't been healthy. And that's something pretty much you only hear at TFNN. We get to go see what the results are, in the past, and why I can say that that's not a healthy checkup out there. If we take a look at gold, the key is it's just coming down and testing Stevie's red line, that oscillator and change line. That means that the blue line that you're looking at underneath the price of gold is still rising. There's nothing more bullish than a rising price oscillator above zero. Now, if gold closes below Stevie's red line out there, well, then it means that you're really in retracement mode. If the price oscillator gets below zero and it's falling, that's a different story. That's not the story. Silver, as you can see, continues to test and reject that level. So both of these remain in bullish territory. That is the meaning of those for both gold and silver. So it's very clear. It's unequivocal. Of course, you could make it equivocal if you wanted to. I think it's unequivocal with regard to what it's doing. Now, the GDX is slightly different, and I do mean slightly different outlook. It is testing and just slightly trading below the red line out there, 25.04. You're trading at 24.88 approximately. But that's not really floating my skirt. And that means that the price oscillator, where right now it reads 0.817, has turned down just ever so slightly. You wouldn't be able to look at that line and know that. That's why the red line is so important for me on my screen. What does that mean that we do? What type of action do you take? Well, then you use this data and you just simply go over. I'd suggest you just go over and take a look at what's going on volume-wise and profile-wise out here. So let's go take a look at the GDX and see what it's communicating to us. So we know we have a slight sideways to pullback going on right now. And volume in this is 34 million shares, versus what? Versus the day when it moved up, the day the music died on February 1st. Just kidding you, 56 million shares. So 34 million, I don't know, it's probably somewhere in the vicinity of similar-ish type volume out here. What we looked at yesterday, you and I looked at yesterday, was the likelihood that somehow, in this case here, remember we took a look yesterday, it was an inside bar. We said that suggests that the price today should continue in that same direction, which was moving lower. And in essence, it's really done that. It's almost like we have two inside bars, though. So it's like we're going to the bar, and it's happy hour out there. But any pullback inside of the GDX, which is likely to happen, if the yen continues to run higher, which at this stage here I believe that it will. That's what the charts look like. Would anticipate that gold will pull back and test the bottom of its TAS daily profile, 24.13. And if it's doing that, that would be your price to fire away for those of you that are looking to get into an intraday-ish type trade out here. Of course, you'd want to see that being done on light volume, and you'd want to go down to some type of intraday chart out here. But as we speak right now, the mining sector really looks pretty good. And it looks pretty good because of what gold and silver are doing out there. hey, things can change in a heartbeat. But until that heartbeat occurs out there, it's the checkup here is hunky-dory. In fact, gold's now up 80 cents, a whole 80 cents out there. So it's looking pretty good. In the case of light sweet crude, we don't talk about light sweet crude too much, but Texas tea out here basically doing diddly. That'd be doing nothing. It's just a sideways consolidation-oriented move. If you're traded out here, boy, you better be a really good short-term trader because it's just not doing a whole lot, nothing to indicate to us that it wants to do a whole lot. And that's really one of the reasons why you and I aren't really taking much of a look at light sweet crude. So what else do we need to? I did mention during the opening segment, for those of you that are traders of the NQ out here, interesting candle that formed at 2 o'clock, not 2 o'clock, during the 2-hour chart. The last 2-hour segment out here was a nice little hammer candle. And that formed as price was going down and testing its 30 or 120-minute profile low at the 52.4170. So the bottom of that hammer candle becomes a key level. Now we can see price trading right now above Stevie's red line out here. So that is positive. That number is 52.6594. If it closes above that level, says price can and should move higher. If it gets closes below that, then it doesn't give us a clear message out here. It certainly would not be a bearish message, but the bullish message would also be, maybe not out there. Okay, so I just wanted to make sure that and there is no hammer candle on the other 2-hour charts. Good question. I know somebody was thinking that. Is there a hammer candle on the ES on the 2-hour or the YM or the TF? And the answer is no. It was just the NQ, which is the strong dog, supposedly the strong leader. Let's do this out here. I don't know what this is, but let's go switch over and take a look at the indice charts. Let's just kind of go through things one at a time. How about if we do that? Unless you want me to look at something else, then send me an email, ping me in the Tiger's Den, give me a call, even better than that, and we can absolutely take a look at what you want to. But let's just start off here. Since I had mentioned the NQ, in essence, let's go take a look at the NASDAQ composite. What do we know here? Everything looks bullish. It just simply does. Wouldn't start getting somewhat cautious to bearish until we see it close below Stevie's red line. That price today, or right now at 137, is 57.3780. That is the exact price out here. So there's nothing wrong with that stock chart, that being the NASDAQ composite. The problem has been the new 52-week highs, and you wouldn't know that by taking a look at that chart. You would think that it is healthy as can be, and you and I know that, well, that's really not the case out there, because in the case of the NASDAQ composite, there are only right now 157 issues that are at a new all-time 52-week high out there. That is not a picture of health. The semiconductor index is not a picture of health. This has formed a seventh wave move. That's the letter G that you see. Price then appropriately on the very next session closed below Stevie's red line out here. Semiconductors are struggling, which is another interesting thing. Similar to the Russell 2000, that is also struggling out here. These are not healthy things for the market that you and I are looking at. Very interesting, as Schultz might say. No, that was R.D. Johnson. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 57. S&P is up 6 points out here. If we take a look at the Dow Jones Transport, we're just going to flip through these indices one at a time, get a feel for what's going on. And Terry went ahead and watched the Saturday Night Live skit. You know, Saturday Night Live, I think the show has basically been horrible for years. And I've been watching it just as long as you have. How many years out there has that been? Like 40 plus years, right? 41 years, however long it's been out there. But lately, some of the spoofs that they've done, this one I really enjoyed here. This is the last weekend. The little spoof that, what's her name, Melissa something or other, I don't know her last name. She does a great impersonation of this Spicer guy out there, and it's just hilarious. This has nothing to do with your politics out there. It's just kind of like I thought, from my standpoint, it was. I watched it a few times. I thought it was so funny out there because we got to have a good laugh, right? And in this case, he may not have thought that it was so funny, but I thought that it was pretty funny. And now Terry thinks it was pretty funny too. So hey, it is what it is. Now, in the case of the Dow Jones Transports, nobody's going to think that this is very funny because it's got a seventh wave move. It's got a price relative strength diversion pattern. Now, the positive is price is trading back above Stevie's red line out here, but hasn't been able to take out the highs. So we would call this one neutral to bearish, not all out bullish. It would need to take out its most recent highs in order for that to occur. And in doing so, it would have to be moving higher with more relative strength. Otherwise, that pattern just simply would continue. So they're not out of the woods, those being the transport. So the transports and the semis are not out of the woods. They usually they usually confirm a market that wants to move higher. We looked real quickly at the Russell 2000, by the way. Maybe you didn't catch that. But if you look at the Russell 2000, top lines out here are nothing more than the Russell 2000 divided by the Russell 1000 in order to get a ratio to determine who's stronger than the other. And in this case here, this says that the large caps are stronger than the small caps. That's not the way that the market is cruising to all-time highs. This should be out in front. And instead, it's got a declining tops pattern, and it's just really got a test of a previous swing point. That's all. The Russell 2000 is not broken out. It's made a newer high, but This is another one of those troublesome non-confirming messages out here with regard to how it is acting. The VIX index, we've already covered that. We don't need to cover that again. Wilshire 5,000. Is there anything wrong with this? No, this is the checkup of the U.S. stock market, and the answer is no. Actually, there's not anything wrong with this. I don't know. I don't have access to know the number of issues inside of it that are at new all-time highs. At this stage here, I won't assume anything, but pretty much you would think that the NASDAQ Composite and New York Stock Exchange, which are telling us there's problems. There's probably also problems here inside of the Wilshire 5,000. But in looking at that stock chart, no, there's not anything wrong with it. New York Stock Exchange, here we take a look at this in relationship to the fact that it's moving higher, doing less relative energy out there. But until a bearish reversal signal forms, this thing can move higher, should move higher out there until that occurs. 11,374 is Stevie's red line out there. But again, you can see it's got one of these patterns here that have been associated with tops of consequence. And that's really where I think that we are, even though I'm probably one of the few to say it. But when the market's made those bottoms, I've also been one of the few to say that there's a bottom that's forming here. So you can see the consistency that I have at tops and bottoms out there. We look for these really nice confirming signals to give us that information, and we just simply don't have it. And if we do have it tomorrow, I will tell you, guess what? We've got it, and then it's off to the races. Now, inside the NDX 100, it's retracement this morning. Jay mentioned something about it was interesting that the lows of yesterday couldn't be taken out. Now, I think of the NDX 100 as an example may have tested the lows, but you're right, could not be taken out. And really all that it was doing was testing that level of support, Stevie's red line. Now, in this case here, 5237.46 is the number. And so it being able to take that out wouldn't really take a whole lot. It wouldn't be that big of a deal. It'd almost be somewhat unnoticeable, but would be very noticeable to you. Now, price is moving higher, doing with strength, so that's no longer a pattern out here. There was by the way, a TD sequential count, number 13, you can see, two trading sessions ago. So in this case here, 1, 2, 3, 4, it would need to close below the low of the trading session 4 days ago in order to give you a time to mark a confirmation of a top out here. Stevie says just get close below the red line, 5237. And that ought to do the job. Has not done the job just yet. But the NDX 100, probably the indice for us to watch most, which then should mean we should probably go take a look at Apple, right? Because of its weighting structure out here and the fact that it's at all-time highs as well. And if we take a look at Apple, it's dealing with the April 28, 2015 high. And that had volume more. We're not even close, are we? 118 million shares is at that swing point top. So any close today, if we were to close under 134.46 and above yesterday's high, it would, I don't know if it'd be new closing high or not. I'd have to go back to April 28th, 2015. But here's what we know. Volume today is 20 million shares. That 20 million shares, again, is going after 118.92. So if it closed below it, it's a test of a previous swing point, would be with lighter volume. Then you'd be looking at the NDX 100. You'd be looking to see if price ever closes below Stevie's red line. That would be another one of those signals that we would be looking for. So you can see what it is. We've already identified, right? Like from my cousin Vinny, we have identified, even though that's not what I don't think that's what he said, but maybe that's what he said out there, what needs to occur in order to turn the lights out. Right? And so you're only getting that here at TFNN. We're using the exact same set of tools, in essence, that we would use in calling the bottom of the market out here. And instead, this kind now, in the Russell 2000, by the way, it actually gave us a confirming signal of a top yesterday. So a second confirming signal, by the way, when it was moving higher, doing less relative energy, formed a little shooting star. Now, we're not getting any follow-through today. I'd like to get follow-through. We don't have follow-through. Does it mean that this pattern isn't confirmed? It does not. Just means we don't have follow-through. And Stevie's red line number out here is 1383. You need to see really a close below that. Of course, this also has a hammer candle from a few days ago, 1, 2, 3, 4 days ago. That's what you want to be watching at that bottom area is the trading session from 4 days ago. Any close below that, then that would be curtains to the downside. So as you and I go through, take a look at the Dow, right? Here's the Dow moving higher, doing less relative energy out here. Not a big deal. Can't continue to do that. is in wave number 7 as I count it. And but until the bears show up here or we see it close below 22.25, it's still cautiously bullish out here. And S&P 500 are the same, moving higher, doing less relative energy. If you and I were to go back and take a look at all other types of significant tops out here, we see those patterns in play. So it's the same pattern. We're not getting fooled again, right? No better song than that from the Who out there. We're just not going to get fooled again. Now, the key is a lot of people might have looked at these patterns and say, boom, you automatically trade it, and that's not what you do. You wait for the cavalry to arrive. And at 1:50 in the afternoon, they haven't arrived. That's just the deal. Shamil. This is Steve Rhodes with TFNN. We've got one more segment to go. No emails, no requests in the Tiger's Den. I'm lost in the jungle of these markets. I'll try to find my way out when we get right back. Steve Rhodes with TFNN.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So a couple of requests that came in. I say I've got a couple of private emails and even a couple of private messages in the Tiger's Den and some emails that you guys have gone out, or gals have gone out to watch that Saturday Night Live skit out there. And a couple of them, they're just kind of classics. In any event, you sort of know my sense of humor out there. So two requests that came in. One, to take a look at the U.S. dollar index. So, Russ, with regard to the U.S. dollar index, you want to look at it over the near term. Do you expect the dollar index to test roughly the 104 area? Here's what I would suggest. It's going to go test 102.02. Or should. That happens to be the TAS weekly profile high. So it's above the daily, got above the daily 3 days ago. It's been tested, it's been rejected out here. And so really the next area for it to target is 102.02 out there. If it can close above that, 102.02, then yeah, your 104 target would remain in effect. If I take a look at, and that's really a confirming message here, or kind of confirming message here, we can see price got above the Stevie's red line several days ago, 2, 4, 6 days ago. So that was telling us the price oscillator was turning up. You can see here the black digits, the black number counts out here. That is really part of the Tom DeMark setup phase. So today is going to be, or should be, day number 7. Now that's a close above the session 4 days earlier. And so when you get to number 9, take a look at out here. This is what I want you to pay attention to, Russ. If you take a look at the high that was put in on the U.S. dollar index on December 21st, now that's after this actually confirmed with a 9 count. It was also happened to be a TD combo count out there, a 13. So you had two different counts out here. But in this case here, where the number 9 on the setup, number 8 and 9, when they trade with inside the number 6 bar. Now, number 6 was yesterday. So when you get to 8 and 9, so not today, but tomorrow and the next day, if it pulls back and is trading at all within bar number 6, bar Louis out there, that usually tells you that you're coming to an end. It does lost its momentum, its energy out there. So, Russ, that's what I would suggest that you look at. Watch yesterday's session. Watch where the next couple of days trade into, and that will assist you with regard to whether it's got the oomph to actually get up into 102.02. But right now, I'm going to assume that that is the case. The second question that came in, I hope that that answers your question out there. The second question that came in was a target for the dollar yen. And the target for the dollar yen out here is going to be this 115.17 area. And that is going to be the TAS weekly point of control, which is really also referred to as the center of the box. In this case here, it's pretty much smack dab in the center of that box out there. So no indication what will happen when it gets up to that area, but it looks to me like that is where it is targeting. And, you know, may put some pressure on some of the mining equities out here. You know, it all depends on what's going on when this happens. It's going to be trading, you know, overnight, over day, overnight, over morning, you know, the whole 9 yards out there, whatever. Where did the 9 yards thing came from? Why is it that we even say the whole 9 yards? I mean, I got to look that up. Maybe somebody will look it up for me and tell me, but who came up with the whole 9 yards? With regard to a 30-minute chart out here, Danny, and what's going on inside the Japanese. Now, in this case here, we're looking at yen futures out here. You know, we're seeing just a little bit of a bounce. I don't know. My read on this is this actually says that yen futures should bounce up into about the 87 area. So that says that maybe there's a little bit of a breather going to go on with the yen currency pair. But as long as it trades above 113.70, then I would say, Danny, that better, more chances are that it's going to get to the 115.17 area. So, folks, thanks so much for joining me this afternoon. Stay tuned. Our favorite polar bear, David White, he's up next. And because it's Tuesday, got the Tom O'Brien Show and Andy Heck to take it on home from 5 to 6. We'll see you on Wonderful Wednesday. Eat lots of chocolate, dark chocolate especially. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.